Well, you heard it in the news there that stock markets, share markets around the world are tumbling. And, of course, this was coming. We all knew it was coming. But it has, of course, impacts here, not just globally. And, look, I was out having a very quiet shandy last night and overheard in the hostelry I was in a number of people talking about primarily going to Oz, whether or not it's better to go to Oz and you get a better deal and life is better over there. And figures would tend to indicate we're having something of, well, if not a brain drain, a worker drain. To talk about all this in the context of the New Zealand economy and what we need to be doing, we are joined now from Bagrie Economics by Cameron Bagri. Cam, good to talk to you again. Welcome to the platform.
Morning, Sean.
Hey, just while we're here, this global share market dip crash, is that going to get worse? Was it expected and did we see it coming?
Well, yeah, hindsight's a wonderful thing, but if you sit back and think about the bigger picture here, the bigger picture's pretty simple. There's an inflation problem around the globe. The inflation problem is getting worse as opposed to better. That means central banks have got one hell of a job ahead of them to rein in inflation and get that thief back in jail. How are they going to do it? They're going to lift interest rates, and expectations for how high interest rates are going to go are ratcheting up by the week. And finally, the market, I think, in the past couple of weeks was teetering, but the past, 3 odd days, it's been like a little bit of carnage, to be honest, because you've now got prospect of even higher interest rates. There's recessionary risks are rising in the United States and around the globe. And, of course, the outlook for earnings is looking pretty subdued because inflation puts pressure on costs and firms cannot pass on all of those price increases to the end consumer. So you've got a little bit of a perfect storm out there at the moment. And this is stepping aside from what's going on in Ukraine and other hotspots around the globe.
I've been talking to people, Cameron, who say, don't think GFC, think Great Depression. Now, do you have a view between those two positions as where we might end up?
No, I don't. I don't like to get into the jumping off the deep end sort of stuff in regard to how things could unfold. Not too many people are forecasting a recession at the moment, but certainly, if you look at where we sit at the moment, we haven't seen this sort of inflationary pressure since the 1970s. And the playbook in regard to history is just not there in regard to any episode we can actually point to. The thing I tell people is to go back and have a look at the past 30 years. In the past 30 years, we've been in a declining interest rate environment. So central banks have had your back, interest rates come down, presto, asset prices move up, and house prices have been moving up in New Zealand around 7% every year on average. Inflation hasn't been a problem globally. Well, what are we seeing over the past 10, 20 years? Well, central banks have injected about $31 trillion worth of additional liquidity in the form of printing money. Now, they've got to progressively take that money away, and that's going to represent one hell of an economic challenge out there, aside from the fact that interest rates are moving up, and interest rates are still low, but interest rates are well off their lows. And for the average borrower out there at the moment, well, you think about it in New Zealand, you say you got your first mortgage last year at 2.19%. Well, when you roll it over, and there's $160 billion worth of mortgages rolling over the next 12 months, I'd say your next mortgage rate is going to be around 5. Now, 5 is still low, but 5 is a hell of a lot higher than sort of 2.2. So it's a bit of a rude wake-up call because we've just been in an environment for 10 to 20 years that's just been abnormal, and there's going to be a bit of a transition as things start to settle down.
All right, let's talk about, workers. And I know you keep an eye on all the statistics around the economy. What is happening in terms of people leaving the country because they feel there is a better life or a better economic life offshore?
Well, if you look at the migration numbers at the moment, we lost around 8,700 people in the last 12 months. Now, to put that in context, pre-COVID, aside from the big rush we saw in the March 2020 quarter, migration was running around 60,000 per year. So we've gone from a massive big number to a small outflow. What's interesting within those numbers is that the people that are leaving, it's actually not Kiwis, New Zealand residents that are leaving. And that's actually a small positive number at the moment. We gained about 200 people in the last 12 months. Where we're losing people is what's called the non-residents. A lot of people are just packing their bags and saying, I think I might go home, or visas have expired, etc., etc., etc. But the big risk going forward, and the anecdotes on the ground are concerning, is that how many of these people in their 20s are sort of lining up offshore jobs or offshore travel plans. There's a lot of employers out there at the moment that are very nervous in regard to losing staff over the next 12 months. But right here and now, we're not seeing that economic effect within the data.
All right, so these people who are leaving are not high-value workers?
Well, it's hard to get the mix. A lot of people just haven't had their visas rolled over. And then people are looking at New Zealand now through a different lens. New Zealand has got a whole lot of issues. You look at housing unaffordability, law and order is rising in prominence. The education sector, if you look at 60% of kids regularly attend school, warning bells are starting to go off in regard to that. There's a nasty underbelly out there across New Zealand, and we're all having these conversations within our own sort of households in regard to what's sort of going on. There's the big gap between the haves and the have-nots. There's a big racial debate that's going on, but it's just got a bit of it's got a prickly, nasty underbelly that's somewhat uncomfortable. In fact, somewhat's the wrong term. I think it's downright uncomfortable in regard to where New Zealand sits. And New Zealand just doesn't feel like that lovely little place, if it ever was that lovely little place.
Yeah, this is interesting. What you're talking about. I can remember in my time working for Gareth Morgan, and he said there will be endless demand for New Zealand residency and to come and live in New Zealand. Everywhere else in the world is worse than we are. This is the place to be, and we're never going to have to worry about people lining up to get in. Are you telling me that you think that perception has changed?
On some levels, but it's just, we're seeing it on the ground with a lot of, as I said, the non-residents are when we're seeing the big flows out. We've lost about 9,000 in the last 12 months. That's a big number. The normal mix to New Zealand's net migration is that we lose Kiwis. They go on the OE or they go work overseas, and we gain in regard to non-residents. What we're seeing at the moment is a complete reverse of that. We're gaining a few Kiwis, 200, but it's been the non-residents that are packing up, and then they're off.
Yeah. All right, I can get that. Can we do anything to reverse this? Should we do anything to reverse this?
Well, it's pretty hard in regard to the New Zealand stuff. And the New Zealand residents are typically the big swing variable, and particularly between New Zealand and Australia. We've had those net New Zealand numbers at certain stages get out to be a loss of 30 to 40,000. The best we tend to do is to keep that number flat, which is what we're doing at the moment. Yes, a few people leave, but Kiwis return on the other side, so the ledger tends to be balanced. The big risk over the coming 12 to 24 months, and it's not just 12 to 24 months, it's 5 to 10 years, Sean, is that we're now competing in a global economic environment, and everybody's short of staff. The United States, the United Kingdom, Australia, everybody is crying out for people with the right skills. And what are people going to be attracted to? Yes, they're going to be attracted to the likes of lifestyle, and New Zealand can tick that box. But, making money and housing affordability are a pretty big part of the relocation notion in regard to where you actually want to be. And New Zealand is a long way away from other countries in regard to having affordable houses or paying high remuneration.
So we're just not that cool a place to come to anymore.
Well, on some levels, we are still a cool place, right? Because there are certain, lifestyle aspects about New Zealand. You can still work down in New Zealand and get a foreign international salary. So that's attractive for a lot of people who can play that card. But if you're a nurse right here in New Zealand at the moment, and if you're comparing your remuneration in New Zealand and you're comparing your remuneration in Australia, well, we know which one is bigger, and one is an awful lot bigger. You're talking at differentials of 30-odd%.
And lifestyle better probably in Australia too, in terms of the sort of housing you can afford, the sort of lifestyle you can lead in terms of material wealth. Well,
the big one, once again, is just, most people, you want to put a roof over your family's head. And you don't want to be absolutely knocked out with an incredibly high mortgage, because, of course, interest rates are moving up. And as interest rates move up, well, that's more of your discretionary spending power that gets taken towards the house. But it's not just being able to buy a house, being able to rent a house. And some of the numbers we're seeing now around New Zealand and places like the likes of Pororua down in Wellington are just quite frankly ridiculous in regard to what people are now having to pay. Look, you're hearing rents up around $800 to $900 a week, which is just blatantly absurd.
And unsustainable. Why have they gone that high? Because landlords are now having to pay higher interest on their mortgages?
Oh, there's a whole combination. If you look at Economics 101, supply versus demand.
Yeah.
If we didn't have such a shortage of the housing stock, and the shortage of the housing stock is not in Auckland. I think in Auckland we're building too many houses. We're now starting to see rents in Auckland actually drop 1.6% in the month of May. And that's going to extend, I think, into the back half of this year. Where we've got most of the housing shortages now across New Zealand is in the regions. It's in places such as the Hawke's Bay. The big policy focus is on Auckland. Well, where we've actually got all the shortage of houses is actually in regional New Zealand, and those regions are not getting enough attention out of central government. But of course, costs have gone up as well in regard to landlords. Some landlords have chosen to absorb those costs. A lot of landlords have just decided to pass them on.
Yeah. Cameron, looking at inflation and the situation we're in, many political commentators saying Grant Robertson is thinking or is hoping that inflation has peaked because the tank's pretty dry and that things will get better as we roll closer and closer to the election. What is your opinion on that? Has inflation, have interest rates, are they peaking out, or have we got more pain to come?
Well, interest rates definitely haven't peaked out. The Reserve Bank's latest projections were saying the official cash rate's going to 4%. We're about halfway there at the moment. We've still got a wee way to go. If you look at inflation's up at 6.9. Do I think we've peaked? No, I think we're going to see another nudge higher with a 7 handle in front of it when we get the next quarterly results. We get into the back half of this year, and as we said, there was a pretty eye-watering big number September 2021. I think from memory it was 2.3% in the quarter.
Yeah.
Now, I think as that drops out of that annual rate, technically the headline inflation rate is going to start to subside, and that will continue again over 2023. But let's sit back and think about the bigger picture here. If inflation gets down to 6% in 2023, it was still up around 5%, which would be inclined to be my central scenario. That's still a big inflationary problem.
Yeah, the
Reserve Bank's got a mandate to keep it between 1 to 3, 2% on average. 2 years out, inflation expectation surveys are saying it's going to be at 3.3. Now, that will be 3 years outside the 1 to 3% inflation band. That's a fail for the Reserve Bank as a central bank in regard to meeting your mandate. So, yes, inflation, I think, is going to come down. But I think we could be set for a lot more inflation stickiness over the next sort of 2 years. And once again, inflation's a thief. It steals people's money. And we're in an awkward situation here, Sean. We're going to have to make some hard choices. No one likes inflation. Well, the recipe for fixing inflation is that asset prices and economic growth is going to need to get crushed.
Yeah.
If we're not prepared to stick around with that and take that, then inflation is going to stick around. And inflation is the biggest concern to households out there at the moment, according to the Ipsos Issues Monitor. So there's no free lunch here in regard to what's going on, unfortunately. There's going to be what's called a bit of pay in the piper. And it's going to be difficult over the next 2 to 3 years. And we're going to need some real economic leadership, particularly politically, to navigate what is going to be trying times. There's unders and overs. We've had the overs, the economic good times, the party times. Well, now we're getting into the unders side of the economic cycle, and that's going to be challenging. Asset prices come down, unemployment moves up. That's not economically friendly. It's not politically friendly, but it's part of the bitter medicine to get inflation back where it needs to be.
I hear, Cam, finally back to the news of the day, which is the share stock market tumbles all over the world. What do you do if you've got money in those markets? And they are, of course, run largely on confidence and feeling.
Oh, I'm not a financial
advisor. No. Yeah.
So that's but go talk to your financial advisor.
Yeah.
Make them work for your money in regard to giving you proper financial advice. I guess one of the things that I do, Sean, is that I adopt in life what's called the sleep test. And if something is keeping me awake at night, I tend to do something about it. If I can get a good night's sleep, then it doesn't matter whether things are going up or sort of down. That's one of the key tests that I use in regard to whether I change strategies or start to do things a little bit differently. You got to remember though, Sean, the next couple of years is going to be exciting on some levels. Why? Well, asset valuations are going to come down to more reasonable levels, which will provide some better entry points. The other thing is that people in there need to take real risk to make real money. In an environment of quantitative easing and zero interest rates, people weren't actually taking real risk, but they were still making real money. Welcome to the new normal, or what's called the old normal, where real risk to make real money. Now, that's a far better economic environment than a whole lot of these economic distortions, negative yielding interest rates, printing money we've seen for the past sort of decade.
Yep. So you're saying we might have more excitement, more dynamism in our economy?
Well, typically it takes a downturn, tougher times, to embrace change.
Yeah.
What we tend to look at through a downturn is that the glass tends to be half empty. Well, if you're an investor, it doesn't matter whether the glass is half full or glass is half empty, you've still got to take a sip. Now, you've actually got to do something. And quite often out of tough and trying times, you go through what's called a reset and you can come out far better on the other side. What we've seen for the past decade is just fundamentally abnormal. There was $18 trillion worth of instruments that had a negative yield in front of them around the middle of 2021. That was just a massive market distortion. People investing in all these assets that were intellectual property based, they made no money. They were buying an asset because of the intellectual capital in there and prospect of exponential growth. There's a reason the Nasdaq's down in excess of 30%. It's because a lot of the companies that are listed on it, they make no cash. They make no money. What investors are now starting to swivel and start to focus back on is let's invest in something that's actually physical and actually makes the big C. It's called cash.
I hear you, and it is always good talking to you. Actually, I don't know whether to feel optimistic, pessimistic, or excited from that analysis. Cameron, always good talking to you. Cameron Bagri from Bagrie Economics. And share markets around the world tumbling this morning. We are not holding on to those non-resident people. They are buggering off. I don't know. On some visceral level, I look and say, I don't care about non-residents leaving. People who move countries just so they can have, I don't know, a nicer car or a nicer flat seem to me to be people, I don't know. I make a moral judgment and I say they're mercenary people floating around the world thinking me. I've never, ever in my life, I'll be honest, considered living in another country. I totally feel that my feet are on this ground and this is where I belong, even though quite a few Kiwis do the OE, which I never did.